Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me in the studio is Amit Ranjan. And it's a Tuesday morning, and the markets, they have started on a rather quieter note. Nothing significant and nothing that should surprise us, because we have witnessed a strong rally since late January. I mean, Nifty is up nearly 1200 points since this low of this year, which was about 21,137. We are currently hovering around the 22,400 mark. So some caution in the system is understandable, but at the same time, these intermittent corrections, they are giving opportunities to make fresh entries for traders, because this buy on dip strategy has worked out beautifully in the last 2-3 weeks, and that could continue to be the preferred strategy unless certain key supports are breached. But more on that later. Let's begin with a quick check on the global markets, and the cues, Amit, over there, they are not looking rather supportive either, right?
Red everywhere, and while Nvidia, which has been the cushion that has been rallying the US markets, rose 3.6% even yesterday. Dow Jones closed in the negative at 0.25%. Apple continues to go down. It closed in the negative at 2.54%. So that cushion has gone. Probably the investors do not like the fact that they have gone out of the EV market. S&P 500 closed in the negative at 0.12%. Nasdaq closed in the negative at 0.41%. Coming to the European markets, Stock 600 closed in the negative at 0.03%. Now, China has set a growth target of 5% for the year 2024 to fight deflation, put money in the hands of consumers, and they are going to extend their defense spending. But despite that, the Hang Seng this morning was 1.86% in the negative and slipping. Nikkei, however, is slightly in the positive at 0.58%. So that is the only green in the global markets that we get to see.
And Shanghai Composite Index, China's headline index, is up marginally. It was trading with slight cuts, as was Hang Seng, but it has moved in the green. And I mean, over the overall mutedness in the in the Wall Street and European markets, we are also seeing, because one of the Fed voting members, they came out yesterday and they said that the first Fed cut, I mean, that could come in May or June of this year, but that could be followed by a pause, meaning there could be just one rate cut and not a series of rate cuts as the market was expecting. So that is perhaps adding to some bit of sluggishness in the global equities, and we have had a quite start to the morning as well. Nifty, as we speak, is trading up below the 22,400 mark. It's trading marginally lower, down about 0.2%, and the numbers you see on your screen are as of 9:30 a.m. this morning, and we are currently also trading below the 22,400 mark. Sensex is also trading with cuts of about 0.2% as well. The broader markets, there are certainly cracks over there, and the small cap space, I mean, small cap index has been underperforming in the past 1 month. It has given negative returns in the 1 month, and even yesterday we saw about a 0.5% crash over there, whereas all other indices ended in the green. So keep an eye out on that. But with that, let's also bring on board Soni Patnaik of JM Financial. Thank you for joining us here on News9, Soni. Great to see you. And quiet start to Tuesday morning. Nifty, as we speak, is trading below the 22,400 mark. But I mean, the signs of caution, they are becoming exceedingly louder. Nifty yesterday formed a doji candle, traded in a tight range of about 80-82 points, and the overall breadth, I am talking about Nifty here, was also favoring the bears. What's your sense of things currently?
Hi, good morning. See, if we look Nifty right now, 22,400 seems to be the area where it's quite struggling at the moment, but then it is a buy on dips market. So we have to look at for the crucial support levels. I feel that 22,200 is the level where it is holding quite a crucial support, and anything closer to that support should be the zone 1, where one can initiate the long. So perhaps around 22,300 spot levels is a level where you can reinitiate your longs, keep your stop losses of 22,200, then it should bounce towards 20,500. If you look at a positional view for Nifty, it's definitely quite good. It's quite strong, and it indicates that 22,800, 23,000 can also be on cards. However, these the undertone remains bullish, and it should be a buy on dips.
All right, the undertone remains bullish. Buyer strategy would continue to work for you unless, of course, certain key supports as put out by Soni get breached. But moving on, Bank Nifty is also trading in the red this morning, and we are around that 47,500 zone, and that has been a critical level for the index. We have not closed above 47,500 since mid-Jan, and the last time when we were here, the index gave up about 1,700 points. What's your sense of things? How is Bank Nifty looking on the price charts?
Bank Nifty is actually stronger than Nifty at the moment. If you look at 47,500, 550 holds to be a key resistance, but the moment it's crossed the resistance, positionally you can see 49,000 plus levels coming in for Bank Nifty. Immediate support for Bank Nifty is at 47,000 on immediate basis. However, there are also multiple support levels. So if 47,000 breaks, you can see 46,500, 46,000 also acting as very crucial support. So I think Bank Nifty is slightly better in comparison to Nifty as of the moment, and it can seem to be outperforming Nifty. Also, it can definitely lead the next leg of rally.
Good morning, Soni. I'll drive your attention towards Jubilant Industries, which is the company behind the agri brand Ramban. Their stock saw a stellar rally over the last month of over 120%. Last week, it jumped almost over 10%. There was some cashing out probably yesterday. It fell 5%, but it is up again today, 1.55%. What do you make of Jubilant? Do you see it touching its 52-week high of the 1400 levels, or where should investors cash out?
I think definitely it's looking quite strong. Even with 1.5% of up move today, it is heading towards 1400, as the resistance can be seen somewhere around closer to that level. Obviously, the current level may not be the ideal zone to just reinitiate your longs. Perhaps if you can wait for some small dip or a correction towards 1300, 1320 zone, it acts better as a zone for you to reinitiate the longs. Your risk reward be quite favorable in those levels rather than just to initiate a longs at this current level. If somebody is already holding the stock from lower levels, one can look forward to booking some amount of the profits when it touches 1400, 14 or 10 odd levels. I think that's how the structure is. Buy on dips quite strong, and just like look forward to riding the momentum.
All right, 1400 is pretty much close by. We are currently at 1383, and that is on Jubilant Industries, just about 17 points away from 1400 levels. But another stock we wanted to pick your brains on is Tata Motors. I mean, the company has finally decided to demerge its passenger vehicles and commercial vehicle businesses into two separate entities. And some of the brokerages, such as the likes of Nuvama, they see it as a non-event for the company, since most of the upside has already been priced in. But others have upgraded the rating on the stock. For instance, Morgan Stanley this morning assigned an overweight call on Tata Motors. The Morgan Stanley said that the demerger decision reflects Tata Motors' confidence in the passenger vehicle segment, and it shows that it is self-sustaining and could lead to better value creation for the company. But coming to the stock, Soni, Tata Motors has been one of the biggest wealth creators in the Nifty basket, over the last 1 year or so. Even this morning, it is up 4%, over 4%, has breached the 1000 level at record high in 2024, has surged, 30%. What's the ceiling for Tata Motors? I mean, considering the kind of immense rally we have seen over the past 12-15 months.
I think, obviously it was a sentimentally positive sort of a news impact that can be seen on charts right now. And technically also it has given that breakout, it's obviously at all-time highs and has run up really well in a very good, strong momentum. Option chain breakout above 1050, so it's quite strong. It is heading towards 1100. It's quite poised to test those levels. May not be the ideal situation for somebody to just enter at current price and just ride the momentum rather towards 1100. If you're just looking for a medium term play, then anything close to 1000 to 950 odd levels can be the ideal zone where one can reinitiate the longs. Of course, you cannot see a lot of exhaustion or correction in this stock the way it has moved on charts recently. So I think it's just it makes sense to hold your longs and look forward to 1100, 1080, 1100 is a range where you can book your profits, and any sizable dip or a small correction of 5%, one can just look forward to reinitiating those longs.
Okay, Sony, 1100 is where to book profits on Tata Motors. But what are the picks you have for our investors today?
So the first pick would be HDFC Life. We've seen a very strong breakout coming in. HDFC Life option chain breakout above 600 level yesterday. It was struggling to break and close, above 600 mark, but it has successfully done so yesterday. So HDFC Life is looking quite strong from a positional bet. So one can just enter from current levels, keep a stop loss at 585 and a target of 640, 650 can be seen on cards. So that's the first pick. The second pick would be BEL, Bharat Electronics. It's adding quite aggressive long built-up positions. So yesterday also it was adding aggressive long built-up positions of 7% and today also BEL has added good long positions. It has held on to very strong support of 200. So keep your stop loss at 200. You can buy at current levels and look for targets of 235, 240. That would be the second pick. And the third pick would be IOC. So I think the entire sector is in quite good momentum. We've seen good long rollovers happening in the OMCs even as of now. So IOC 170, good support, stop loss at 170 and target of 185, 190.
All right, Indian Oil, HDFC Life, and which one was it? Bharat Electronics are among the top trading ideas coming from Sony. Thank you for joining us here on News9. Great insights from you.
Thank you.
And with that, let's slip into a short break. On the other side, we'll be joined by Mr. Rohit Srivastav of IndiaCharts.com.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
The football is mother of all games.
It is a team sport.
The leadership attitude is taking the ownership.
It's always a big responsibility to take decisions and the right decisions.
I always question the stereotypical.
And that's why you are in that position.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more, streaming on world's first news OTT, News9 Plus. Download now.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listing for content-oriented company in India, which is a very unique proposition.
When we look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension for Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching First Tick here on News9, and the markets. They have had a quiet start to the trading day on Tuesday. Nifty, as we speak, is hovering below the 22,400 mark. In fact, it is moving, closer to its day's low. Currently, as of 10 a.m., Nifty is down 0.24%, sitting at 22,352 mark. Sensex is trading with a cut of 0.29%. It's at 73,620 odd levels. The mid cap and the small cap space, they are showing some signs of crack. We have been talking about it since the past 2-3 weeks. The mid caps index is trading on a flattish note with a positive bias. It's at 49,263 mark. The small cap index that has been the weakest segment of the market over the past week or so, and it still continues to hold that, and it's down about 0.83% below the 16,000 levels. And volatility, we are seeing a decline in volatility. India VIX is down 0.8% or so as of 10 a.m. this morning, and it is below 15 levels. But with that, let's also welcome Mr. Rohit Srivastava, founder and market strategist. All right, Rohit is yet to join us, but Amit, let's also look at some of the sectors and how they are doing this morning, because we were, even though Nifty scaled a record high yesterday as well, and it ended in the green, we were seeing some bit of a caution building up in the system, and one of the reasons was that a lot of these sectors, they were seeing some bit of a profit taking yesterday. IT, FMCG, auto were some of the sectors which were dragging the markets lower yesterday. But this morning, a very strong start for the auto pack. It's up about over 1%, and most of the returns are coming from Tata Motors. That stock is at 52-week high, in fact at record high, has scaled 1,000 mark, and this is of course on the back of the news that the company has decided to demerge its passenger vehicle business as well as commercial vehicles business. But I'm made to believe Rohit Srivastava has joined us. Thank you for joining, Rohit. Always a pleasure seeing you. And the financial markets, they are on a tear. Like gold is at record high, equities are doing well, Bitcoin is doing phenomenally well. In fact, year to date, Bitcoin is up about 50% or so. Reminds me of 2021, when every asset class was rallying, but back then it was excess liquidity in the system. What's fueling the rally this time around, sir?
No, partly there is a lot of liquidity. Specifically, US markets have injected a lot through government spending over the last quarter. So that does play a role. They also keep doing these reverse repo operations, which are another source of liquidity. But liquidity as a measure, if you look at global liquidity, total all central banks and money put together, is not back to the highs of 2021. It has been steadily increasing over the last year, but not back up there yet. Having said that, just because it's positive, it is causing a positive mood, and then there's all the government spending in the US, right? So all of that is indirectly playing a role in keeping markets up. Markets also optimistic about the situation around elections. But as I've been repeating over the last couple of months, there should be some caution, because this is becoming a one-way run. And we are seeing weakness in market internals. Either you see sector by sector weakness, or you're seeing the number of stocks that are participating on the upside continuing to decline. So if we just look at the number of that are above the, say, 100-day moving average in the Nifty, that number is on decline over the last, 1.5 months or 2 months, say from Jan to now, it would have dropped from an 85% to sub 70%. So that shows that, fewer stocks are participating slowly. It's what we will call a mild distribution phase that's gone on for pretty long, but the description doesn't really change in terms of what is happening. Even today itself, for example, you can see the IT index, which was, till a week or 10 days back trying to hold up, is now breaking down. It's, going below the 40-day average. If it stays this way by the weekend, we might even see our weekly indicators go into sell on the IT index, and therefore one more sector would have sort of given up on the rally.
All right, and China's National People's Congress begins today, and the expectation, at least for the financial markets, from the financial markets rather, is that there could be a big stimulus package, and if it does come, could that lead to an uptick in the commodity cycle, sir?
So at least the last couple of times it has not worked. That is why I'm slightly circumspect. A year back we were sort of positive on Chinese markets because of the stimulus, and it rallied a bit and then it suddenly gave up. So it's not the first time they attempting to cut rates and announce some level of stimulus. The problem is it has not worked so far. So I don't know whether this time around it will be an outsized move. And if it is an outsized move, then you have another problem, which is the CNY starts to fall. That puts upward pressure on the dollar. So we are in this complicated mix, where every good thing has one bad effect. If you create too much liquidity, you can end up with inflation all over again. And so you have to walk this path on a very tight rope. That is what the problem is. So I really will have to see how it works out rather than predict that if they do this, this is what will happen.
Fair enough.
Good morning, sir. I would like to drive your attention to the RK Swamy IPO. Now, RK Swamy was in the collaboration with Batten, Barton, Dustin and Osborne till some time back, and they a full-fledged advertising agency. This IPO was oversubscribed 2.1 times on the very first day. There's a market sentiment towards it. Now, the investors do not have much of a precedent when it comes to advertising agencies going into the stock markets. There was Pressman, but that got delisted last year. Do you see this trend continuing with more advertising agencies going the IPO route in India as they have done in the West? I mean, WPP is listed on NASDAQ. So do you see the likes of Rediffusion and FCB and Ulka coming into the stock markets in the near future?
Well, not necessary. It's, when it comes to getting listed, it is really a choice. It's a very big business decision, whether you want to be in the public domain or not, whether you want to create a valuation or not. There are companies that have, remained private for forever and not wanted to be in the public space. So I think it's really not just a straightforward call. But yeah, there is an attraction in terms of creating value for, or some kind of proposition for employees. Those are the reasons behind some of these decisions. But it's really hard to say whether every agency would really move in that particular direction.
Close to advertising, the media stocks have been on a sort of a tear in the last 5 days, and probably in the run up to the elections, where media spends are likely, advertising spends are likely to soar. How far do you see this trend going? Advertising revenues in 2019 did not really see a significant growth despite the elections. Do you see that trend changing this month? And what do you see of media companies this time? I mean, do you see them recording their 52-week highs in the next month or so?
Pretty tough job, because when I look at the media index, it peaked out on the 20th of February this month and has been falling for the last 11 days. In fact, the actual top occurred on the 11th of January and it hasn't gone back there again. So I would sense somewhere that the media index is probably peaked for now. I was just speaking some time back about individual sectors rolling over. Media has been one of them. IT is doing it today. Banking has not participated at all. And this is the kind of role you're getting, where individual sectors and stocks are stopping to participate on the upside very quietly by the side. And thinking that, now media, because it's done well over the last year, that it will make a comeback. Tough job. Probably we wait for the market correction as a whole to take place and then reassess which are the best performing sectors at that point of time, and then chase those accordingly.
All right, and sir, before we let you go, the small cap space, I think cracks are beginning to appear over there. I mean, the index, Nifty small cap 100 index, has been underperforming both mid caps and the large caps in the last 1 month. In fact, it has given negative returns in the last 1 month. I think the index is down about 1.5% or so in that period. What's your take here, sir? What's your sense of things as far as the small caps are concerned?
So it is a bearish intermarket divergence when new highs in the Nifty are not confirmed by leading indices like the Bank Nifty or the small cap mid cap index, which is what has happened over the last month. So the small cap index actually peaked on the 8th of February. Since then, we haven't seen a new high. The entire pattern that I'm seeing from Jan to now looks like what we call a head and shoulders topping process. The breakdown really occurs when it breaks below, say, 15,600. That is the neckline. So when it breaks 15,600, it sort of tells you that a slightly medium-term top also would have been put in place. So that is what the risk is right now with the small caps underperformance.
All right, and are mid caps on a better footing or similar signs over there?
So they may appear a little better in the sense that of course, they have not made a new high since the 8th of Feb as well. Just their bounces have been a little higher than the small cap. So overall, the structure may not be very different, but of course, the small cap is weaker than the mid cap in that sense of the deeper retracement that the mid caps have managed to do in terms of the index. But it's not made a new high, so it's still a bearish divergence.
All right. That's the word coming in from Mr. Rohit Srivastav. Sir, always great insights from you. Thank you for giving us your time here on News9.
Thank you. Pleasure.
But let's move on and let's look at how the markets are doing, because they are feeling the heat. Nifty, as we speak, is very close to its day's low. We have, we've opened around that 22,400 mark. In fact, that was also very close to the day's high. But that has been a resistance point. In fact, it was a resistance point in the first half an hour. But from there on, we are seeing a bit of a turn in the sentiment. The Nifty, as we speak, is down 0.3%. It is above 22,300 although, and that will be the first crucial support for us to track as far as Nifty is concerned. And the Sensex is also seeing, it's trading with a cut. It's down about 0.4%, trading just a cut away from 73,600 mark. The mid cap index remains the strongest segment of the market. It's trading with a positive bias. Currently, it's placed at 49,260, and the small cap index that remains the weakest segment of the market. It's falling to its day's low, very close to 15,900 levels. In fact, it had broken below 16,000 after a gap of 5 sessions. So expect weakness to persist over there. And as Rohit also pointed out, there are certain technical indicators out there pointing towards a reversal in the trend, and that's for the small cap index. But good to see a decline in volatility this morning. India VIX, as we speak, has fallen below 15 levels. It's down, trading with a cut of about 0.5% as of 10:10 a.m. this morning. India VIX was sitting at 14.85 levels. Remember, 15 and the 16 is the zone where the market, where India VIX has traded for the majority of the last 2-3 months, and so it's good to see some bit of a decline in volatility, especially considering that it's a event fueled week. India VIX will of course also mean that the options pricing and the premium on the options will also reduce significantly, and that could also affect the range essentially in which Nifty trades over the coming weeks. But with that, it's a wrap on this edition of First Take. Thank you for watching.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known.